Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is May 3rd, 2018, and tonight we're going to be looking at coffee, the ETF being Joe, J-O. We've got kind of a straightforward analysis here, but with a slight little mix here. So we've got short and intermediate to the point of the upside as far as the trends go. The long-term trend is pointing to the downside, part of the mixture that I'm going to be talking about. So anytime you see this little asterisk here, it tells you that there's some confluence, a difference, if you will, between any of the different trends to the market. Now, when it comes to the technical rating here, anytime you get this little sideways arrow process, this means that this is a market that is setting up for a move. It tells you that something has not been happening, and therefore, by logic, something is setting up for some type of a move. People often want to look for what's strong, what's trending, what is at the tail end of a trend, and by that nature, it's already done. What you want are the markets that are in limbo. And when you look at this particular indicator right through here, when it's doing a lot of nothing, that's in limbo. Limbo is good, not bad. If we take a look at the patterns that have come up here, this is telling us a story here. A surge high in Joe and coffee, and a pop high in not Popeye, the spinach guy, but a pop high has occurred here in coffee as well. So what that means is that we're really in a phase right now. There's obviously limbo. We've had a surge. The surge has extended itself, but it's amounting to perhaps some type of a trend reversal. So let's take a look at a daily bar basis here. Really get a feel for what's taking place. Major trend to the downside, no ifs, ands, or buts. Anybody can see that. We've had, during the course of this trend, different types of conditions that have said, hey, it's going to reverse, it's going to reverse, it's going to reverse. It's become tiresome. But we're in a phase right now where, again, we've had that reversal, that base to the market. And just now, just within the last couple of trading days, we've had an overextension to the market. If in fact, this is an extension, and I'm going to show two different indicators, two different pro alerts right through here. We have a surge high and a pop high. And both of those are telling us that this trend on a daily bar basis has gotten ahead of itself. No surprise. We're not looking for a market to immediately show a low and then have an extension forever, where the market's really going to trend to the upside. So this is actually a good sign for some of us. We're actually short the market, and I'll show this to you just recently, having been able to take advantage of portion of this trend to the upside. But in theory, what we'd like to see is the market sells off and then starts to rally again. And you're never going to have a trend that's going to immediately reverse, especially a strong trend like this, and then have it just immediately just kind of reverse the upside. That just doesn't happen. There's always going to be a little bit of consolidation whenever the new trend is going to emerge, and you're going to find yourself in a position where there's a great opportunity. So the fact is this. Here we have two different alerts, just recent, where we have a pop top and a surge high, and what we'd be looking for is some type of reversal. That reversal, depending upon how strong it is going to give us an opportunity to establish new long positions and go from there. So let's take a look at the website again. First, I want to show this. Just recently we had a weekly long initiate itself. So that's telling you one thing, that on a larger time frame that we're looking for a condition that's looking more positive on the upside. At the same time, and this is where it confuses some people, this being the 3rd of May, we have a couple other short positions that establish on short-term intraday bars, 45 and 90, as opposed to a longer term weekly. What we have is a couple of conditions where we've had two shorts and a long establish themselves. Kind of awkward, but if you really think about it from a logical standpoint, if you're not a discretionary trader and you're a systematic trader, you're viewing the market from different angles, different perspectives, long-term, short-term. Short-term meaning the 45 up to 240-minute bars, and the longer term being the daily up to weekly bars. And so what we have is two separate conditions that are taking place here. No surprise. This is a nice rally to the upside that would cause the weeklies to say, hey, maybe a new trend is emerging to the upside. That surge to the upside is telling us on a short-term basis, the 45 and 90-minute bars, that the market has perhaps gotten a little ahead of itself. There is no surprise here. So what's going to take place is that the weeklies will probably have, with this surge that has taken place and the opportunity to go long the market, is going to take a bit of a breather, and that we would expect the short-term systems, those 45 and 90-minute and any other ones that may pop up here, could theoretically have the market sell off and be able to take advantage to the downside. Still long that weekly system, but then eventually that 45 and 90-minute bar system are going to take their profits. We will have a loss on the weekly, but then the market will start to rally. Theoretically, we'll go long some of the short-term systems, and we'll be able to add to our positions on the weekly and the long side. So big picture, that's essentially what's taking place. I'm excited by the coffee market as a whole. If we come back here, I alluded to the fact that the market was kind of in limbo. So here's coffee. You see this I guess indecisive little bar here where it's short. It's not a big bar left or not a big bar right. It's kind of got this little zigzag, if you will. Those are markets on the master watch list that have a number of conditions that can all pop up. Sometimes there's a lot of conditions that are pointing in opposite directions. Sometimes there's just a couple of indicators that are pointing in opposite directions. But if you're in this limbo stage, specifically in this gray area, this neutral phase, that's a good market to start to look at. In fact, I would encourage you to look at these markets as opposed to the ones that are at the top of this level or at the bottom of this level, by centering in on focusing on these markets that are in limbo. You put yourself in a really good position that the market in itself is poised to make a bit of a move, as opposed to the ones that are at the top and the bottom of the list that have already, for the most part, had their move. So what we are looking for is the fact that it's in limbo from that side, and we have on the energy level just another indicator we're going to look at. Here's coffee towards the tail end, and the reason that we have the pop top, that one particular indicator in place, is that the market has had a bit of a thrust to the upside, and that thrust is evident. Nobody can discount this, that we've had in relative scope to some of the other moves to the market right through here is one good indication that when you have that kind of a surge to the market, there's going to be a thrust in the energy level. Again, I'll come back here. And here it is that coffee is in the orange level, and it is what we would consider to be in an expansive mode, and potentially heading back further into the red zone. But no matter how you look at this, that it is in a thrust period, an expansive phase. So when you get into those phases, once it concludes itself, we would expect the market to come back into a little bit of mean reversion. That mean reversion is perfect. Then we find ourselves in a condition that you can say to yourself, is the market recovering and establishing a new trend to the upside, and that we're looking at a better buying opportunity. So when you look at the systems and the way that they're playing this out, this is just quintessential the way that we would want things to show up here, where we're establishing new long positions on the longer term trend on the long side based on weekly bars, and that we're hedging ourselves on the short term intermediate time frames. So the way that this is going to work out here is that we'll wait for the market to potentially reverse course a little bit based upon these indicators, the surge and the pop high, and then have it retrace a little bit. And once that market retraces, I'm sure that we'll probably, depending upon the velocity of that sell-off, theoretically liquidate our long position on the weeklies. Hopefully that won't be the case. But what we will see is that an opportunity to unwind some of those 45 and 90-minute bar systems, take some profit, have some more long-term systems, long biased systems, and be able to look for an opportunity to go long the market, add to our weekly system, and then have an opportunity, as choppy as it may be, to be able to take advantage of some type of a trend to the upside. So that's what the systems are thinking, because I know the systems, I've developed the systems, and so I know what they're basically looking for. And should that condition take place, then we'll be in a really good position to take advantage of a hedged position on the downside, which is what's happening now, 2 shorts, 1 long, take advantage of any type of a sell-off to the market, unwind those positions, having hedged the weekly, and then have the market start to rally to the upside, theoretically unwinding those short positions and starting to go long further with some other intraday systems. And from that standpoint, that's a really good overview as to the mentality of having multiple systems and the way in which we would go about trading this type of a market. So we'll see what does take place here with the potential for the sell-off, the profitability on the short side, the loss on the long side on that weekly system, hedging ourselves with a short position, and then be able to unwind the shorts, establish new longs, and then be able to allow the market theoretically to head higher here. So we'll see how things kind of play out here, but I'm actually quite encouraged by the kind of the setup, and that the systems are doing exactly what they're supposed to be doing, and doing it in what I'll term as an intelligent fashion, as opposed to some of the people that are out there, you're either long or you're short. There's no hedging. We look at one type of a time frame, and you miss so many opportunities that it boggles the mind that people still trade in that particular fashion. And so what my intention with this blog is to show you the particulars you can go through to hedge and trade intelligently, dynamically, utilizing these different types of systems and these different types of indicators, and take advantage of what the markets present to themselves. So let's see how things kind of play out here, and with any luck we'll get a retracement, allowing the shorts to take some profitability, and then be able to establish any type of new long positions where available on the intraday basis, and be able to take advantage of any new trends to the upside that might emerge. So that's kind of the upshot of today's video blog, and we'll take a look at another market tomorrow. Thanks so much.